All right, welcome back, everybody. Bruce Porter joins us now for this week's Dollars and Cents. Thanks for coming in. Good to see you.
Good to be here.
All right, we don't have a traditional question today, but we're going to talk about something that we all should be thinking about this time of year: financial resolutions. Here's that word again, resolutions for 2017.
That's right.
Those are the ones that really count.
Trying to get off to a good start for the year.
Yeah.
The idea, we all want to keep in mind is let's make this year better than last year. And there's lots of different ways to approach that. But I thought discussing that right now might be a good way to kick out the first part of the year here and get everybody's thought process going in the right direction.
Exactly. And these are the ones that I think if you stick to, you'll really see a benefit down the road.
Yeah.
So where do we start?
Well, the very first thing, you got to know what you want. So you got to establish your financial goals and objectives for the beginning of the year. Now, when you do that, I think it's very important to not be general, be specific. So, for example, if you've got a credit card, and let's say you owe $1,200 on a credit card, and you really want to get that paid off. So make it an objective to get that paid off by July the 1st and pay so much per month and try to stay on track. And that way you can see the significance of the reduction of the debt during that period, and you can reward yourself for achieving that goal. So the more specific you are with determining what your actual objectives are, I think the better off you will be during this year.
And paying down debt is always a good thing. All right, number
Absolutely.
two, prioritize.
Prioritize your debt, because if you've got high interest debt, that needs to be the first priority. Low interest debt needs to be last, and that's for obvious reasons. You want to eliminate the interest that is eating your lunch quicker than the one that's not. So if you prioritize, make a list and be specific. I'm going to pay this one off, I'm going to get this, and you'll get a handle on your debt. You can't really move forward with saving until you eliminate that interest expenses that is eating you up.
It's like paying yourself. Think about that Christmas list that you stuck to, didn't you? You can stick to this too.
Absolutely. The third thing, close unnecessary accounts.
Yeah.
I had a gentleman in last week. He had 6 checking accounts. Every one of them had a fee. He just had them for different reasons. He had a farm account. He had this, he had that. And really, he didn't need but one account to pay bills out of, things like that. So if you eliminate unnecessary accounts, you'd be surprised how many fees you're paying for accounts that you don't even use.
Did he eliminate all but one?
All but one.
Wow. How much did it add up to roughly fee-wise?
Well, actually, it ended up to about $47 a month in savings just off those small accounts.
That's nothing to mess with.
Well,
Good deal.
it's $500 a year,
Sure
so you
it
might
is.
as well.
It makes a difference. It absolutely does. All right, collect your change.
Here's
That
an
sounds simple
idea.
enough.
Get your kids involved on this. Collect your change. So if you go to McDonald's, which, we've talked about being careful with going out to eat. Well, it happens.
It does.
So when you go to McDonald's and you pay, and you got a bill for $3.69, give them $4. Keep the change when you get home at night. Put the change in a jar. All right?
Yeah.
Get your kids involved with that. Have them add up the change. Have them put it in the jar. Have them keep track of what's in the jar. And before you know it, you got enough money in that jar to make a difference. You can use that to invest with. You can let your kids invest. You can pay off debt, or you can save it for vacation.
A vacation.
Save it for school. Save it for all kinds of things.
And it really does show you how the little handful of money can add up.
Oh,
the little
absolutely.
coins.
Absolutely.
You think they don't matter? Of course they do.
Absolutely. Here's an idea that actually we've heard out of sight, out of mind. All right. Enroll in an automatic savings account. All right. So now talk to your bank, see if it's an option that's available. Have money automatically transferred into your checking account every month, out of sight, out of mind, and before you know it, you've got remember our rainy day fund, or our saving to spend fund. If we're going to upgrade our washer and dryer, all right, honey, we're going to put $100 a month from our checking into our savings. And it's going to be automatic. And then before we know it, we've got enough money saved up to go do what we want. So that is an idea that can actually build up a pretty good little account and help you out. Small steps, big results. That's what we got to do starting out this year. And if we'll do these things, it'll help get us going in the right direction.
And why not start now? We're still in January.
Absolutely.
You might as well.
Well, it's what, 64 degrees and it's January.
I know.
So we should all go outside and do something.
Go
this
outside and do
afternoon.
something. This is a good thing to do. And then
think
when
I'll
it's
mow.
cold, stay inside and do all of these things because you
have-
can't get out.